Welcome back to the weekly market wrap for the week ending May 21st. This is Markets for Millennials. And obviously, the big story of the week has been Bitcoin. I'm actually not going to address Bitcoin in this weekly market wrap because I'm going to be doing a separate video on that. So instead, we'll just be looking at the equity markets, the DXY, yields, gold, and silver, and maybe oil. We'll see about it. We'll start with the dollar. The dollar has been nearing at the low end of its range from the basically January 6th of 2021, where we hit this low around 89.21. What was the low of that day? Actually, it was 89.209. Yeah. So we've been trending down there. I have these long-term trend lines. Different people have these trend lines drawn at different spots. I started with a trend line coming from the second trend line here, making a lot of these touches, and I cloned that. That's what I'm using. A lot of other people have different lines. The point is that the dollar is on some pretty decent long-term trend line support. We're also at a horizontal support, which kind of goes back to 2008, early 2018, which was resistance and support over the last in the early 2000s. So, point being, we're at a pretty important level with the dollar index, and a lot of that is going to drive the direction of gold and silver, particularly, but also of equity markets in general. So I actually don't think, just given the macro backdrop, I still am expecting the DXY to come down and at least retest our 89.25-ish resistance. And then I really do think we're going to go lower. We've got a couple of levels to get to. I'm not sure how long we'll stay down for. I'm not sure at what point if anything, if the Fed is going to get drawn in and have to react to what's going on. I do believe they are trying to devalue the dollar to help to monetize the debt, the U.S. debt and stuff like that. I do expect that we're going to early next week we're going to get a close underneath this ascending trend line, work our way down to this support level, and we'll see what happens. I think that this process will take over the next week to do. It's possible we could get a big sell down below this horizontal trend line or horizontal support. I don't think that's going to happen, but it's possible. You'll also see on my chart here, as I readjust it, you'll also see that I have this descending trend line touching a couple of the daily tops on the wicks. And I think that until we break above out of this descending trend line, I don't think we'll be going up to even challenge this 91.36 support. We have to get above there first and retest before we can work our way up to that. You can see that it's been support and resistance in the more recent months. So that's my outlook on the dollar at this particular point in time. We'll take a look at yields. We've been dancing around. Let me pull back to my weekly chart so you can see this once again. I've shown this multiple times, but you can see that we have this descending trend line, which I've cloned a couple of different times. We hit the top of it back at the end of November or end of October, early November, but we came back down below this level that I have highlighted during the crisis, and then we've been coming basically on the uptrend since August, and we've been dancing around that trend line quite a bit. We're also above support at 150. We're below resistance at 1675. As you can see, we've come above both this descending trend line and we've come above this horizontal support a couple of times, and though we've closed on the daily above it, we had one weekly close above this above 1675, and we only had a couple of weekly closes above the ascending or descending trend line. So yields are kind of meandering in this range. It's really hard to tell what's going to happen with yields. I think a lot of people are surprised that yields aren't going higher with the inflation prints and things like that. Who really knows? It's hard to know if behind the scenes the Fed is up to anything. A lot of people have kind of thought that yields were just going to take off, and that's part of the reason why gold was going down, for example. A lot of people thought yields were going to take off, and that was going to force the Fed's hand. I did see some different people talk about how they thought that the Fed was going to eventually get to a point where, like, we would get up to kind of around the 2 level, and the Fed was going to be forced to get involved. We haven't seen that yet. Doesn't mean that it can't happen, but so far it hasn't. And until we can get multiple weeks closed above 1675 and above this descending trend line, I won't be convinced yields are going higher. I do think they can, but I won't be convinced. And I am of the opinion that if yields go up, it may not be for a while, because we've had years in the past, multiple decades ago, where yields were in the 4%, 5% range on the 10-year. So we could totally go up further. I don't know when the Fed will take action. I am one of the people who believes that if we continue to resume up like this, eventually the Fed will have to get involved. I'm not sure if that's going to be a move up, parabolic, or if it's going to be a chop and eventually getting up there. I don't really know. It's hard to tell, but that's what I see right now. What's been really interesting, I'm going to switch over to gold first. What's been really interesting is to see yields going sideways. Let me go back to yields for a second. Yields have basically been slightly in a downtrend, but mostly unchanged ever since the 16th of March. If we go to gold, ever since that point of March, gold has been definitively up. And so it's hard to really know why that is. Some people are tying it to Bitcoin's fall over the last couple of months, or Bitcoin sideways action and then fall recently. Not really sure why. It's hard to know if the gold market is showing something that hasn't happened yet. I know there's been a lot of turmoil in the Middle East, so gold is a safe haven asset, so that could also be the reason why over the last couple weeks. I'm just pulling back here on my 3-day chart because I've been making a case for some time that what we were doing was a massive cup and handle, and I don't, I recently came out saying I don't think we're going any lower. Anybody who's followed my videos, you've noticed probably that I've gotten rid of my green box down here, because I don't think we're going to touch these levels again for some time, if ever. I think that with the macro backdrop, we're just on our way up. So for me, because we've cleared, I'm about ready to start erasing these descending trend lines so that they don't mess up, so that they don't trash my chart up. What I'm looking for on gold is to get above 1916. To me, that's going to be the final. Well, maybe not the final line. We need to get above that, but we also need to get above. You see where we've had some resistance here. I think once we clear, what is this, 1967? We clear that, and we're off to the races, in my opinion. But we got to get there first. We got to get above this trend line first. It's interesting to note. I circled this. It's interesting to note that gold has been, after a lot of really significant up days, gold has been up, but slightly up. Each of the last couple of days up, and since Monday. So that's interesting to me. I don't know if gold is losing its momentum. I'm not sure what's going on with that, but it is something to watch out for. What I think is interesting on top of that is if we go to the silver chart, we had been coming up, and actually I'm going to see if I can clone this and see if it'll fit and make a channel. Yeah, kind of. Yeah, we've got resistance. So the question is, what does this mean? Is this a bear flag? Because it's a parallel channel going up. That's typically a bear flag. But it also could really only be a bear flag if we were in a downtrend, and this is sideways. So I don't really know if this means anything that I can clone that line, but it has basically been bound within this ascending parallel channel. What I thought was interesting was I made this little bull flag. We did pop above it. We even popped above resistance here at 27.61, but then we came right back down. It looked like we were going to retest and resume, but then we had a basically sideways day, and then today was down. That's what's interesting on the gold to silver ratio, which I've looked at a couple of times. You know, we have not made a lower swing low. Well, obviously from the silver squeeze attempt by Wall Street Bets, but even by February 25th, we haven't made a lower swing low. I'm not sure what that means. Normally, when it's a precious metals bull market, you have silver outperforming gold. I suspect this is a lot to do with perhaps the Middle East stuff and maybe some of the uncertainty regarding Iran as well. Those things are in the news, and I think people are kind of flocking to gold for safety. We'll see what happens. That's what I'll be looking at in gold, silver. Equities. So the S&P, I mentioned in last week's video, we were at a pretty important level. If we look here, we had closed above, last Friday, we closed above this level at 41.24. We sank below it. We touched my support here at 40.50. But then yesterday we had a huge up day, once again, coming back up above. And we tried to get above this resistance here. Let me darken this. At 41.77, we tried to get up through that, and we were rejected by it. So to me, I think the S&P is kind of in no man's land. I'll be looking for this to get above next week and retest this support zone before it's off to the races. But until it gets above, confirms and resumes with a higher high, I won't be convinced about this. I do think the backdrop, the macro fundamental backdrop, is bullish for the S&P and for equities in general, but I have to see the price action confirm that before I'm willing to say what I'm going to do. This would have been a great opportunity once we came down off this support and pushed up. Would have been a great opportunity to buy. You might have done that over here and then gotten stopped out. I mean, your stop loss should have been right around there. So if you took the trade here and put your stop loss, down here, I don't know, or just underneath this resistance, maybe you got stopped out, maybe not, I don't know. But definitely if you took this trade, then your stop loss should be right here. And this is a pretty good trade so far. If you took it here, I don't know who did, you're over 2.5% up. That's pretty good. But I won't take the trade now. I'm not going to take the trade into momentum. Looking at the Dow, it looks like we're going to close above this resistance line, so I'm going to change this into support, and I'll lighten this up to get it out of the way. Our next line, it looks like it's going to be up here. If I adjust this basically around 35,000 will be what we're looking to get above. I'm going to look for next week, maybe on Monday, to come back and retest this, and then maybe on Tuesday to have a candle resuming up. You can go on a smaller, like the 8-hour time frame, 12-hour time frame, and go off that if you want to, but I'm going to be looking for the resumption up before I look to get involved. In fact, let's take a look at the 8-hour. Yeah, this looks like we got the 8-hour candle in. So if on Sunday night, Monday morning, if we can get a green 8-hour candle up and make a higher high, then right there, if we can clear that, then I think that that's a good, that means that we're going to continue back up. Perhaps this is actually a good place to take this trade if you haven't already taken it. It is Friday. It's kind of risky to take a trade on a Friday. I usually stay away from trades on Fridays. That's why I'm saying if on Monday we can bounce off this and resume up, that's when I would take the trade. If on Monday we take off, you are not going to want to take that trade into the momentum because it'll be a low probability trade. So just keep that in mind as well. So right now the Dow, I'm looking for that retest here. I'm waiting on the Dow to do that, just like I'm waiting on the S&P. Now the Nasdaq over the last week has made a tremendous, in fact over the last 2-3 days until today, had made a tremendous move back up above this support line, bouncing from the support that we had here at just about 13,000. I said that was a critical level. We didn't fall below it. We didn't close below it. So the NASDAQ actually is in a really good spot, because on my daily chart here, I have this descending line, which was kind of the make or break, bullish descending trend line. So just look at what we did here. We let me pull back so I could show you this prime trend line, which I cloned. So I'm not going to say that has all the weight in the world, but it is another confirmation. So we came back above that line. We came back above our horizontal support, and we're above this descending trend line, and we are retesting currently. So if on Monday, Sunday night and Monday, if we can get this candle up higher, then that's looking pretty good for the NASDAQ, and then it's going to be on getting to above this resistance at 13,879. That's where I have that line. I know it looks a little odd on my daily chart because I go off of the 8-hour normally, but for these videos I'm doing the 1-day chart. So that's what I'll be looking for here. This trade, if we can get above this spot, it's about a 2.5% rise. So it could be worth it, but you'd have to be really protective, putting your stop loss in just below this support level. And you'd have to be ready to take some profit here on your trade, because remember, the NASDAQ's been having some trouble with this area, getting above it and then staying above it. So you're going to want to be very, very protective of your trades, because it could just get rejected and back down. Okay, so if this trade does come up, you can either move your stop to break even, or you can take some profit. But either way, that's a trade you're going to want to be very defensive of. And it's not going to be until we can get above and stay above this trend line for at least a few days. You see, like we've had a couple of closes above. I would say we'd need to close above this trend line for a week before I would get comfortable taking the long side of that trade. And then quickly looking at the Russell, still in a little bit of a precarious and interesting situation on the Russell. It's still interesting to me, seeing as though, the Russell led a lot of the rise ever since the election, basically the November election, and it's been sideways for a long time. And I think if I show my 50-day moving average, we are having trouble getting above it. In fact, we're getting rejected by it. We've been rejected by it once, twice, just in the last couple of weeks. So I'm a little concerned about that. I'm also concerned that the 50-day is starting to point down. So I'll be looking to see what happens there. On the Russell, we have to hold this trend line. We can't afford a weekly close below that trend line. Otherwise, there may be pain ahead on the small caps. So that's the market look for today. Be watching out for my Bitcoin video later. Hopefully this helps you with the market outlook, and if you were able to learn something from this, benefited from it, go ahead and like and subscribe and share with somebody else who you think might find it helpful. Thanks for watching. I'll see you guys next time.